Alrighty then. Welcome everybody back to another episode of CRL Chart Request Live, the show where you provide the requests, we provide the charts, hence the name of the show. If it's your first time here, it's very simple. If you have a request, drop your ticker in the chat, or if you would like to skip the line, you can always email us questions at stockmarketmedia.com. We've gotten, how many emails did we get since our last show? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9 emails since our last show. 9 requests to get to, and then we'll get to the chat. So JC, you're ready. Let's get to them.
Yeah, let's do it. First of all, I know that this is Chart Request Live, but can I request a chart? Do I have that authority?
All right.
Do I get one? I mean, I just think this is the tail of the tape. Is that how it's said? Tail of the tape? Kind of explaining what it is that's going on, and the NASDAQ and S&P 500 stuck below overhead supply from, the prior cycle's highs. I mean, as long as this is the case, messy for longer remains the case. Now, I think there's going to continue to be movements and sector rotation underneath the surface, but at the index level, it's going to be tough, especially with technology under pressure. And these charts, home builders look just like that. Semiconductors, tech, industrials, all the most important areas look exactly like this. Stuck below overhead supply. So messy for longer persists. That's my chart.
All right. Let's start with ExxonMobil. I meant to get to this one last week and didn't get around to it. So let's start there.
Yep. So here's ExxonMobil, bellwether for the energy space, of course. And, with crude oil trading at the highest levels all year, this is a big one, Spencer, making new all-time highs, right at it. It's hard to fight this. I continue to think if this thing's above 100, there's no reason not to own it. Remember, most investors don't own it. Actually got kicked out of the Dow Jones Industrial Average since it got kicked out of the Dow Jones Industrial Average, energy, shocking, has risen over 200%, and no sector is anywhere near that. I think number 2 is like tech at 40% or something like that. So nice job.
Only 40%. Only 40%.
Yeah. Well, energy's up over 200%. So thank you very much. They kicked Exxon out of the Dow right around here, right in early right when we needed some additional energy exposure in the Dow Jones Industrial Average. They're like, nah, let's add more tech. They added Salesforce instead. Nice job, guys. And here we are making new all-time highs. So great sentiment down near lows. And if we're above 100, no reason not to own it. Remember, only 4% of the S&P 500 is energy, Spencer. Only 3% of the Dow.
And rising every day. All right.
0% of the NASDAQ not rising ever, by the way.
All right. What about Snowflake here? This was from Patricia. She asked us about Snowflake.
Oh, the old Snowflake, you say. The old Snowflake. When Snowflake was hot, all these tech stocks were IPOing and SPACing and all this stuff. And then Snowflake here, we were looking at, I usually like to talk about the market capitalization. This one in particular is 50 billion software stock out of Montana. How many software stocks are out of Montana there, Spencer?
That can't be right, but I don't want to argue. So
7,000 full-time employees.
All right.
Yeah. Bozeman, Montana. Who knew?
Oh, that's basically California.
Is it? I don't know where that is. My Montana geography is not very good.
No, it's not geography. It's a demographics thing. It's California.
Oh, all right.
Yeah.
Anyway, so here's Snowflake, and so $50 billion software out of Montana. Who knew? And then here's the support. Sort of this is the range of that prior support there, right near 200. Whoop, right? And then what happened? That turned into resistance, right? And this is still kind of just overhead supply. So we really got to get above 200, hold above there, and maybe we squeeze higher, but we're stuck below all these former support levels near 200. So I think this is a mess until we resolve higher, if we ever do, right? So here you're looking at a consolidation. Does it resolve lower? Does it resolve higher? Premium sellers have made a killing in this name. In fact, this thing's such a mess that tomorrow in our options trading meeting, with our analysts, I'm going to talk about maybe selling a strangle in Snowflake if we can get paid for it. I think we can.
All right. Stay tuned for that. Let's move on. Let's look at DraftKings for support and resistance.
Support and resistance on the old DraftKings. You know,
I was active on DraftKings over the weekend.
Yeah, I know
I
you
try
keep
not to.
he's taking a victory lap, Spencer, because he made some money today. He's made some money this weekend gambling.
Yeah. I tend to only gamble sparingly. You know,
Are you
maybe
proud of yourself?
maybe once a month or something.
Spencer's taken 2 victory laps today on his gambling success. Right. Can I sell calls, naked calls on Spencer?
Yeah, do it.
So a lot of market memory near these levels, right? As you can see here, right? You know, call it around 26. That turned into support, right? So above 26, you know, it's trying to break out of an uptrend, but still kind of stuck below this overhead supply here. Kind of had this failed, you know, sort of whipsaw. You know, the real resistance is right here, right? You know, that's what we're looking at. So 32 is probably a big level. So below 32, you want to stay away. And then, or selling calls against that, right? So here you're looking at 26. So maybe selling 32 calls, you know, maybe selling 26 puts. You know, you're not getting that right now because you're so far away from that. But selling 32 calls, you know, 45 days out, something like that is probably not too bad. You know, DraftKings had a nice bounce, so volatility might be muted, so you might not be getting paid for it. I'll have to talk to Sean about that. You know, he's my options consigliere, right? Yeah, so I you know, I want to check with the implied volatility. But if we're getting paid for that, I'm gonna get involved.
All right. I love some of these emails we got. We didn't just get requests. We got requests with some color to go with it. So let me read you this. This is on Halliburton. So take a look at Halliburton. We love your analysis on the ratio chart against Schlumberger. Both look good, of course. And Schlumberger is already above its 2022 highs, whereas Halliburton is not. Except the ratio chart against each other shows that Halliburton is outperforming. How much do you like the probability of Hal breaking out above its 2022 highs?
Well, yeah, great question. So here we're looking at Halliburton, you know, pushing up against these highs, trying to potentially break out. Nice base here, right? Prior uptrend. This is classic, you know, behavior, consolidation, and then you get the rally probably up towards, you know, probably up towards that 55, 56 level, something like that, right? Those are those former resistance levels. You can see here a lot of market memory, right? So that's what I'm seeing here. Now, interesting ratio. I actually don't have that coded, so let's just code that real quick. Excellent. So I'm using Optima for those wondering what I'm using. So here we're looking at what? We're looking at Halliburton, right? And then we're going to divide that by Schlumberger. And then let's call it Hal Schlumberger. All right. Now let's plot it. So we're going to go Hal Schlumberger. There's your custom code. And this is really what it looks like. And then if you want to, so this is Hal versus Schlumberger over time. And then let's get the other guy. Let's just get the Hal itself. So now we're overlaying Hal itself and then Hal relative to Schlumberger. So let's thicken this, make it nice and pretty. We'll use a blue here. So here we're looking at Halliburton. And then down below, we're looking at Halliburton versus Schlumberger. Bigger. And then here we're looking at Hal versus SLB. So what are we seeing? Well, we're seeing that it's historically, it's been, they've moved together, right? Notice the bottoms, right? Both Hal on an absolute basis and Hal on a relative basis, both bottomed at the same time. But while Halliburton has been appreciating on an absolute basis, it's really been underperforming Schlumberger, right? Schlumberger has been the winner. I think what the question might ask is maybe some bottoming here, right? Because when you zoom in, this bottomed out a couple of months ago, and we're starting to see it picking up. Now, this might be exactly what we're seeing. And Halliburton up here could be in the process of a monster breakout, which would mean potentially on a relative basis, some catch up in Halliburton relative to Schlumberger. Right, it's sort of what I'm seeing, because traditionally I've seen Halliburton really moving with that relative strength, but it's diverged more recently. So maybe that reversion and a breakout in Halliburton is certainly possible, right? Maybe we can even do a little Schlumberger down here below. Right. Like this.
Oh, this now we're getting fancy.
Do a little Schlumberger. What do you think? A little SLB down here. I mean, SLB, so here's the difference, right? So this SLB, look at this thing. This thing's already taken out those former highs. It's already making new highs. Whoop. It's already making new highs. So there's definitely some underperformance that we've seen out of Halliburton more recently, but this could be changing. There's no question. I mean, listen, if you're debating between Halliburton and Schlumberger, I mean, obviously the correlation's high. You know, maybe the answer is don't overthink it. Maybe the answer is,
I like that.
You know, maybe the answer is Halliburton's playing some catch up now, right? Is Halliburton a higher beta name? It's slightly smaller, right?
Is it? Let's see. Let me check right now.
Schlumberger is a $85 billion market cap, and Halliburton is 36. Halliburton's 5-year beta is 2.1. That's very high. Schlumberger is 1.8. So they're both high beta, which is more of a function of the sector itself, really. The market cap is nothing humongous. So something to keep in mind, too.
Nice.
But yeah, so anyway, so that's my analysis on Halliburton.
I like that. That was really good. Great question. Great answer. Okay. Requesting for Affirm. I have recently started following and learning from you guys and trying to put knowledge to the use. Affirm looks like a nice weekly and monthly closes, along with the daily and weekly RSIs nearing 70 and an upward sloping 200-day moving average. So that's a lot of different indicators there. But Affirm, what say you?
Well, if you were on the conference call last night, we certainly talked about it. You know, it's making new 52-week highs, but, you know, if tech is going to struggle, this thing's going to fail. You know, so we're looking right around 23. If it's above 23, it's fine. Right now it's 23.83. These are these former highs right here, right around $23. You know, so those are the levels that, you know, we're keeping a close eye on. If we lose that, it could get nasty. If it starts getting nasty for technology in general, this one in particular is a software stock out of San Francisco. See, that makes a lot more sense, Spencer. Software out of San Francisco, that I get. Software stock, 50 billion out of Montana. I didn't see it coming. Not gonna lie.
Yeah. All right. What about where was my list here? There it is. UUUU.
So many U's.
What's the
that I'm old enough to remember when there were 4 Qs. Did you know that? There used to be 4 Qs when you were in diapers, Spencer.
I knew that. But the only reason I knew that is because I just read Josh Brown's book. So.
And he talks about the 4 Qs?
Yeah.
So there used to be 4 Qs, but then the guys with accents, like down on Wall Street, it would sound really bad because they'd be like, 4Q, 4Q, you know, so they had to change it to 3Q.
I believe that, actually. I believe that. All right, let's see.
What do you think? Is this a base? So this is one of these uranium alts. So this is like the altcoin of uranium. Sitting right here at $1.3 billion out of Lakewood, Colorado. Ain't that something there, Spencer? Lakewood, Colorado. This is Energy Fuels, ticker symbol UU. UU, that is 4 U's for you folks counting at home. 4 U's. What do you think?
I mean,
it's
a base. I mean, it's a base, right? It looks.
It's in a range.
Looks
in
nice.
A range, you know. And then, you know, if you want to do kind of some similar analysis, we can create.
Maybe you got a little support there. I don't. What would you say? It's 750. I'm not sure.
What we can do is we can do a similar comparison here. 4 U's here. UUUU, CCJ.
Well, yeah, someone in the chat asked about CCJ, so I'm glad you brought that up.
All right, well, let's do a UUUU relative to CCJ, where CCJ gets the name, the Exxon Mobil of uranium, which I always found hilarious, right? Do you find the humor in that? Like, isn't that funny? The Exxon Mobil of uranium. I don't know. I always thought that was hilarious.
I don't know. I don't know if I've ever heard that before.
Yeah. Well, uranium hasn't had a bull market since you've been in the business there, Spencer. But in the old days,
that's the truth.
In the old days, that's what it used to be called, you see. And then, so here's on a relative basis. So CCJ being the blue chip, right, of the old situation. And then, we could be seeing a potential huge relative bottom here. If uranium is going to start taking off again, I could see some outperformance here out of the junkier ones, right? The altcoins, if you will. And then CCJ on its own, broke out of this nice base. Exxon Mobil and some of these other energy stocks kind of look similar, but they haven't broken out yet. This one already has. You see that? So energy is not necessarily just oil and gas. You look at these coal companies, been making new highs for a while now, not anything new. These things have been killing it.
Okay, let's go quick and then get to the chat. What about Lennar? Wavy wants to short Lennar. There's a gap between 80 and 64 and needs to be filled, he says.
Yeah, I mean, I don't disagree with this at all. This is a good look here, because if we're below 116, I think you can short the hell out of it. So this is Lennar. We're right at 117, so I'm not quite convinced just yet. This is a $33 billion home builder out of Miami, Florida. I didn't know they were based in Miami. I knew it was a Florida company based in Miami. How about that? Blue Lagoon Drive. That's right by the airport.
Did not know that.
Come on, residential construction, Lennar, $33 billion. Speaking of beta, it's about 1.5 beta.
Sorry, wait, yeah. The gap is 80 to 84. What did I say? 80 to 64, 80 to 84. Yeah, I can't read. Sorry.
Yeah, I mean that's a little aggressive. That's a little aggressive. It's not out of the question. For me, I'm looking at more like one. Yeah, I mean, listen, it's tough to guess how low it can go, because for me, it's less of a crash and more of a range. You still got all this former resistance here, near 107, 108. So it's got more work to do to the downside to really prove that we can see, those 80s. I mean, maybe, but we got to break the recent lows. I mean, there's a lot of work to do. And today, as we're shooting this video, Lennar is showing a ton of relative strength. So, I take it back. I don't want to say I'm going to short the hell out of it. Not quite. Not quite, actually. I'm going to take that back. I'm going to sit this one out. All right. I might sell some premium.
Joseph Briggs is looking at Bristol Myers or Pfizer. He wants to hold one of these for a year, or he wants to know if we should not buy either of them.
Well, here's the thing, right? There's a thing, Spencer.
Pfizer we talked about this morning, so maybe let's start with Bristol Myers.
Well, I'm going to do you one better.
All right.
I'm going to do you one better. I think you're going to like what I have to say here, because let's see, where did I have this? I think this tells the best story. So sorry for my inconveniencing you, but I just want to show this slide here. I just want to show this slide.
Yeah. Okay.
Because what we're seeing is a 20-year base in Bristol Myers. We're seeing a 20-year base in Pfizer and a 20-year base in Merck. So you're asking about Pfizer or Bristol? Both of them are failing at those former highs.
Yeah, it's the two that don't look good.
It's the two that don't look good, right? So that's why I'm bringing this chart. You see what I'm saying? So I know I'm breaking the rules with, am I breaking the rules? I'm not breaking the rules.
No,
this is all good.
Yeah.
But this is a chart that I was talking about yesterday. I think this tells the story. I think if you're going to be anywhere, why would you not be in Merck? No?
It's hard to argue with that, really.
But Merck doesn't look great either, by the way. I'm just saying, Merck is kind of a mess. Maybe we sell some premium in Merck. Merck's really messy short term here. I'm going to talk about Merck tomorrow with Sean in the meeting. Maybe we sell some premium in Merck. All
right, 2 ideas from today. Okay, last one, and then we'll go to the chat, I promise. This was from Kareem. He asked about this company NextGen, but he asked about if you can look at the chart on the TSX, not the NASDAQ one. So I'm not sure what the symbol is for that. It's NEXGEN is the company name, NextGen. And then I'm looking at the Toronto NXE. Okay, there you go. Then this is the Toronto.
So this one's priced in US dollars.
Yeah.
Just an FYI. So this is priced in US dollars. This is the monthly chart. So these are incomplete candlesticks. So just an FYI. But this thing's an absolute beast. So let's just get so this is NXE.
Yeah, what does this company even do? I don't even know what this company
This is a $3 billion uranium stock.
Lots of uranium today.
Out of Vancouver. Well, it's what's hot, right? It's what's working, right? You got to give the people what they want. They want our audience is hanging out on the new 52-week highs list, Spencer. You know, while you're sitting around buying new 52-week lows.
That's not true. That is not true.
Kidding. I'm just kidding. Just breaking balls. I'm just kidding. But obviously these guys are hanging around. The new 52-week high, maybe not the Pfizer guy, but some of these things are working, right? They're making moves in an environment where it hasn't been easy. Now there's still this overhead supply to work out, right? Which is doing right now. So you're looking at about, 630, 650. Let's just call it 650 for argument's sake. So if we're below that, we're in a range. I don't know how liquid the options market is here. If there's any options market at all, there's nothing. There's not. There's a little bit more action on the sixes, maybe a little more than I thought, but I don't know if there's enough action to put a trade on. I'll talk to Sean about that, but this is another good example, sort of a messy one, short term, and I think you wanted to look at it in CAD, right? So here's NextGen price in Canadian dollars. You could already see it taking out these former highs.
Looks a little better, yeah.
It looks a little better. Well, it's just math, Spencer. See, when you denominate something in a weaker number, the weaker denominator line go up, makes the numerator look that much more, or the overall equation makes it look that much more attractive. But, in good old American dollars, America, we haven't quite broken out yet,
Yep.
So that's sort of what I'm looking at. And I live in America, so I'm watching it there, even though it's Canadians are going to be like, but it's a Canadian company, JC. True.
Okay, to the chat we go. H. Shannon asking about Weatherford, WFRD, $7 billion oil field services company. And breakout city, dear Lord.
Dude, seriously, man. This I think is one of those that is like, they're classified one way, but are actually doing something else because, it doesn't look like some of the others. So this is WFRD. You're looking at a close to $7 billion equipment and services company. My suspicion is maybe there's a little bit more technology involved. There's something unique about this. You fundamental guys might be able to tell me, maybe Straza knows. But this is one of those things where when you look at other oil and gas stocks, particularly oil services, they don't look like this at all. In fact, I'll show you what oil services look like.
This is OIS? What is it?
Because it's looking like this in the near term, so I'm making me look bad here because it's a longer term chart. Because this thing hasn't issued for quite some time. So here, hold on. So it's like a higher beta is really what it is. Here we go. It's like a higher beta trade on oil services is really what this looks like. Okay. I think that they're doing something funky. This thing's making new highs, right? We could take the extension levels here. Giving us targets of around 6.25, really, right around 6.25 as the next target. This is an interesting one. This is an interesting one for sure. Weatherford, $7 billion is a small one. It's in the right space. It's oil and gas. Some of these offshore drillers, like Noble and Diamond, they've been working. A little choppy these days with the overall market. They've been going up, man.
Okay, let's go to Checkpoint Software from George. You're looking at the daily and the weekly. Wait, what did I say?
CKPT.
No, sorry.
Oh, no, that's Checkpoint Therapeutics.
I'm sorry. CHKP. What is that? What is CHKP? Is that a I don't know what that is. That's Checkpoint Software.
Checkpoint Software. Yeah,
okay.
That's right.
Yeah, okay.
Look at this guy.
I'm looking at this one for a minute. Cybersecurity, can't really go wrong with that, you know?
Many people have found the way to go wrong with that, Spencer. I hate to break it to you.
Yeah, in the 90s.
No, recently. All right, so this one up on the day showing relative strength. This is Israeli software. Israeli software company, $16 billion. CHKP. And then here's those former highs from March 2000, right? And look at this. They finally made it all the way back. Right? Struggled for a minute. And now, carving out a nice little base there, Mr. Spencer. Carving out a nice little base there. So if you need to increase your Israeli software exposure, this is a pretty good way to do that. I think probably call it 120. Just to be on the safe side, you know, above 120 puts you at a pretty good level. Above 120, I think you're good. And if you really want to get dirty, you want to get a little, dirty, Spencer.
Oh my goodness gracious!
You want to get, feeling a little naughty. You throw your extensions up there to get some price targets.
Oh man, from 20 some odd years ago.
That's right, and you're looking at a price target of 186. How do you feel about that?
All right, hey, wouldn't that be nice, right?
Nice for shareholders, 185, something like that. Yeah, that's right. Nice for shareholders.
Couple more.
Shout out, Israel.
Couple more real quick. Enphase. Joe wants to know, JC, are you in? He's got Enphase going to 120.
Hell nah. This thing is scary looking. Whoop.
Enphase is so volatile. What is the beta on this? It must be through the roof. Let me see.
Historically, probably. Solar stock, 1.5. $16 billion stock out of Fremont, California. But this thing, it's tough. You could bottom fish here if you really want some, you really want this. I got an interesting one here for you that kind of tells the story. This is solar, TAN. And look at all these support levels there, right? And now we're potentially breaking. So solar in general has been a tough trade. Here we're looking at solar right now, up a little bit, up around 55. Listen, if we can get, realistically, I want to say 56 is probably a good number. If we're above 56, I think you got a shot in solar. But man, they got to dig in here. I think it's more about this than it is about Enphase itself. If TAN is above 56, now obviously Enphase is, let's see, TAN, the holdings are almost 9% Enphase, right? So there you go. So, I mean, it's really got to hold these levels. We're looking at, 110. 110 is probably a pretty good level. Below 110, things could get nasty. Above 110, if you really need to do some bottom fishing and you're really looking, for some stuff that's been beat up, I don't hate it. It's just not for me. I'm not doing that right now, but I see it. I see what you're doing.
All right, last one. Who asked about this? TME firm. Zoom out on AIG. How far do you want to zoom out? I mean,
AIG?
Yeah. I mean, you want to go back to the financial crisis, TME? I'm not sure how far we're going here. I assume not. I don't know. I don't know what they're thinking. I assume they mean since like 09 is when I'm like, or 10. I don't know what they're thinking.
This thing got crushed so bad that like figuring out the axis is like too hard for me.
Yeah.
So here in
nice resistance.
split adjusted. This thing went from 1,700 down to 5.
Anyway, if you just look at the last decade, which maybe that's what they're thinking.
Yeah,
I don't know.
Here's your how you doing. Right?
I don't. It's not. This is not interesting. This is not.
Well, I was there.
This is not useful.
And I remember being like on Sunday nights, like watching futures, watching football. Like I would have football and like Dow futures down 9% in you know, on a Sunday night. Like his shit was bananas, dude. It was absolutely bananas. Look at this. And then here's your resistance, right? Here's your resistance around a split adjusted 66.
Oh,
let's
66.6. That's wonderful. Just wonderful resistance.
Just wonderful. How appropriate. So this hot piece of garbage that you know, couldn't, I mean, this is an insurance company. Insurance companies are supposed to be good at math. I guess they didn't get the memo about that and blew themselves up. But I guess, I mean, if it's above 66, I guess if you need to own AIG, I mean, geez. I guess, you know, get back to those former support levels near 100. You know, I guess there's a trade. I mean, I've seen worse things. You guys have called out worse things. I mean, I guess, yeah.
Yeah, if you're looking in the last 10 years, it doesn't look that. I mean, it doesn't look great, but it doesn't look that bad. There's that clear line in the sand, so you got something, I guess.
Yeah, 66. You got to get above these highs from back in 16. Yeah, you got to get above these highs from back in 16.
All right.
Yeah, 67. Yeah.
Cool. That is where we're going to end it here today. We ripped through a bunch of these tickers. If you want to request a ticker for our next show, we do the show every Tuesday and Thursday, 1 p.m. Eastern time. You can email us at the email on the bottom of the screen, questions@stockmarketmedia.com. Thursday, you'll have Steve Straza and Pat Dunawella with you there. So stay tuned for that. Thanks for all the questions, all the comments, all the concerns. We appreciate you. Drop us a like, hit subscribe, tell your friends, tell your neighbors, do all that good stuff. For JC Perret, I'm Spencer Israel. Everyone have a great rest of your day, and we'll see you later.
Adios.